Picture this for a second. It's February, wherever you are right now. Maybe it's raining, maybe it's freezing, maybe you're just tired of looking at a gray skyline. Now, close your eyes and transport yourself. You wake up, you walk out into a balcony, and the first thing you see is the turquoise water of the Andaman Sea. The air is warm, you can smell Thai basil and sea salt, and you think to yourself, why am I only visiting? I should own a piece of this.
It is the classic tropical dream. And I think almost everyone who visits Phuket, Thailand, has that exact thought at least once before they get on the plane home. But usually, by the time they land, reality sets in and they forget about it.
Exactly. But for a lot of people, that dream doesn't go away. It turns into a serious financial conversation. They start looking at properties online and doing the math. But here's the thing I realized while reading through our research for today. It is not as simple as just buy a villa and list it online. There are actually two completely different paths you can take, and they lead to very different lives for the owner.
That's right. We are diving into the classic dilemma of short-term versus long-term investment. And to help us navigate this, we aren't just looking at generic travel blogs. We have some incredible source material today from Ocean Worldwide.
Yes, and this is key. Ocean Worldwide isn't some faceless algorithm. They are a luxury real estate agency that has been physically based in Phuket since 2004. So they have seen it all.
Everything. The tsunami recovery, the global financial crisis, the pandemic. They've seen every cycle this market has to offer.
And specifically, we are drawing on insights from Sandra O'Neill, the director there. She hasn't just watched the market. She has helped thousands of families and property investors navigate it.
So when we talk about what really happens when you buy a villa, we are using her on-the-ground data, not just, speculation.
So the mission for this deep dive is pretty clear. We need to solve a specific problem. If you are going to put your hard-earned money into paradise, is it better to chase the high yields of holiday rentals, getting those tourists in for a week at a time? Or is it better to go for the stability of a long-term lease? Because looking at the initial numbers, one side seems to make way more money.
At first glance, absolutely. But as Sandra O'Neill and her team point out, the question isn't just how much money can you make. The real question, the one you have to answer honestly, is how much work do you want to do?
Okay, let's unpack that. Because I think most people assume passive income means, well, I sit on the beach and the money appears.
Right. That's not always the case here.
So let's define our terms first, so everyone is on the same page. When Ocean Worldwide talks about short-term rentals in Phuket, what does that actually look like?
So we are talking about the hospitality model. This is your Airbnb, your Booking.com, or, renting out a luxury villa for 10 days to a family on vacation.
Right, so high turnover.
Extremely high turnover. Your customers are tourists. They are there for the beach, the nightlife, the quick escape, and they're paying a nightly or weekly rate, which is usually quite high.
And then long-term is, what, just a standard landlord situation like you'd have in the suburbs?
Essentially, yes. This is the residential model. You are looking at leases of 6 months, 12 months, or even longer. These aren't tourists passing through with a backpack. These are expats moving to Phuket to work, retirees settling down, or maybe people just escaping a brutal winter for 6 months.
Okay, so here's the part that jumped out at me immediately from the source material. The income potential. The data suggests that short-term rentals can achieve 2 to 3 times the gross income of long-term rentals during peak times.
It is a staggering number, and that is the hook.
It's a huge hook.
Yeah.
If I told you that you could make triple the money by renting to tourists versus renting to a teacher, why would anyone ever sign a long-term lease? It feels like you're leaving money on the table.
Well, hold on. That 2-3x figure is the headline. It's the gross income. It's what hits the account before reality takes a bite out of it. We need to look at the net yield.
Right.
That is what actually ends up in your pocket after the dust settles. And in the short-term game, the dust settles a lot more heavily.
Because of the effort involved?
Effort, yes, but specifically the cost associated with that effort.
Okay.
I mean, think about it. Short-term is not real estate investment. It is the hotel business. You are running a small boutique hotel.
Right.
You have check-ins, check-outs, deep cleaning every few days, restocking the little soaps and shampoos, answering messages at 2 a.m. because the guest can't figure out the smart TV.
Right. Whereas a long-term tenant.
A long-term tenant is hands-off. You find them, you sign the lease, and usually you don't hear from them unless the water heater explodes. You have predictable cash flow hitting your bank account every single month.
So you're trading that potential triple income for your own sanity, basically.
In a way. But let's get into the actual numbers, because the sanity cost has a dollar value too. Ocean Worldwide breaks this down really well, and the expenses for short-term are they're significantly higher.
Yeah. let's do that financial reality check. Let's talk about management fees.
Yeah.
Because unless you are living next door and cleaning the toilets yourself, you have to pay someone.
Exactly. If you go the long-term route, management fees are typically quite low, around 5 to 10% of the rental income. That's standard.
Which feels reasonable.
But for short-term, you are looking at 20 to 30%.
Wow. So nearly a third of your income is gone just to pay the person handing over the keys and coordinating cleaners.
Correct. And that doesn't even include the utilities. This is a big one people forget. In a long-term lease, the tenant usually pays their own electric and water bill. It's their responsibility.
Makes sense.
But in a holiday rental,
Yeah.
you pay it. And here is a universal truth about tourists in the tropics. They love air conditioning.
Oh, yeah.
They will leave the AC running at 18 degrees Celsius with the balcony doors wide open while they go to the beach for 6 hours.
Ouch. Yeah, I can see that bill adding up fast, especially given that electricity isn't exactly cheap in Thailand.
It's not. So when you have a month where the AC is running 247, plus the pool pumps, plus the laundry, it eats into your margin significantly. And then there is the cleaning. Deep cleans after every single guest versus maybe one big clean a year.
So when you start subtracting all that,
Yeah.
the 30% fee, the massive electric bill, the cleaning, that triple income starts to shrink rapidly.
It levels the playing field. It really does.
Yeah.
Sandra O'Neill makes a really important point about stability, too. Long-term offers predictable cash flow. You know exactly what you're getting. Short-term is volatile. It relies entirely on the high season.
Which is November to April, right?
Exactly. And we'll get to the seasonality trap in a bit. But basically, if you don't make your money in those 6 months, you might be in trouble.
Okay, so financially, it's a battle between high risk, high reward, and steady and safe. But there's another factor here that I think is huge for a lot of people. It's the me factor.
The me factor.
Yeah. I mean, if I'm buying a villa in Phuket, I want to go to Phuket. I want to stay in my house.
Ah, yes. The personal use dilemma. This is often the deciding factor for the clients Ocean Worldwide works with. It's where the emotional value clashes with the financial value.
So how does that play out? Can I just block off a few weeks for myself?
Well, it's a spectrum of flexibility. If you go the short-term route, you have high flexibility. You can just block out the calendar whenever you want. If you want to spend January in your villa, you just don't accept bookings for January.
Right, it's a lifestyle investment.
Exactly. It pays for itself, but it's available when you need it. But if you sign a long-term lease, let's say a 12-month contract, that house is not yours anymore. It's the tenant's home.
You can't just kick them out because you want to spend Christmas there.
You lose access.
Yeah.
Completely.
Yeah.
So if your goal is to have a holiday home that generates some cash on the side, short-term is really your only viable option. But if this is purely a financial instrument like buying a stock or a bond and you don't care about staying there, long-term is often much less stressful.
That makes sense. It's about being honest with yourself about why you're buying it. Are you buying a vacation or an investment?
Precisely. And if you try to mix the two without a clear strategy, you usually end up frustrated.
Okay, let's talk about the customers. Because you can't just buy any old house and expect it to work for both strategies, right? I imagine a tourist wants something totally different than a retiree.
You have to know your audience. The source material breaks this down really well. You have 3 main groups, and they live in different parts of the island. First, the tourists. What do they want?
Convenience. They want to be near the beach, near the restaurants, near the nightlife. They want a pool.
Exactly. They're looking for Patong, Kata, Karan, Kamala. These are the tourist zones. If you buy a property there, you are almost forced into the short-term model because that's where the demand is.
Okay, so location dictates strategy. And the second group?
Expats and retirees. These are the long-termers. They want home. They care about community. They want to be near international schools, supermarkets, maybe a bit of a quieter neighborhood.
So they aren't looking for the hustle and bustle.
Definitely not. They are looking at areas like Churng Tale, which is near the major international schools, or Phuket Town. They want stability and infrastructure.
But there's a third group mentioned in the Ocean Worldwide article that I found really interesting. The hybrid demographic.
The digital nomads. This is a rising sector, especially post-pandemic.
Yeah, people who work from their laptops. They aren't there for a week, but they aren't moving there forever either.
Right. They bridge the gap. They might stay for 2 or 3 months. They need excellent Wi-Fi, maybe a dedicated workspace, but they still want that proximity to the beach.
So where do they go?
Mixed-use areas, places like Rawai or Nai Harn in the south of the island. These areas can kind of cater to both. You can do a mix of short-term and mid-term rentals there. It's a very vibrant community.
It sounds like you really need to pick your strategy before you pick your location. You can't buy a condo in a quiet school district and expect to fill it with weekend party tourists.
You could try, but you would fail. And frankly, your neighbors would hate you, which leads to other problems.
True. Speaking of condos, let's talk about property types. The article compares condos versus villas. Is there a clear winner for investment?
It depends on your risk profile and your goals. Let's start with condominiums. The source highlights that these often have a lower entry cost. They are cheaper to buy.
And easier to manage.
Much easier. Many of them come with rental management pools. Basically, the building manages everything for you. You just buy the unit, put it in the pool, and get a check at the end of the year.
That sounds great for the long-term, stability-focused investor, the set-it-and-forget-it approach.
It is. It's also easier for foreigners to own. Under Thai law, foreigners can own the freehold of a condo unit directly. It's in your name.
Right. But what about villas? The article mentioned some pretty juicy numbers for villas.
Yes. For villas in prime areas like Lyon or Bang Tao, which is a very upscale area, Ocean Worldwide mentions potential yields of 7 to 10%. That is significantly higher than you typically see with a condo.
10% is huge in the real estate world.
It is. But remember the trade-off. Villas have higher appreciation potential, they command luxury rates, but the maintenance is on you. You have a pool to clean, a garden to landscape, a roof to fix after a storm.
And the ownership is more complex, right?
Yes. Foreigners generally cannot own land directly in their own name in Thailand. So you are looking at leasehold structures, usually a 30-year renewable lease, or setting up a Thai company to hold the asset. It requires more legal due diligence.
So villas are for the investor who wants to maximize returns and is willing to handle the complexity. Condos are for the set-it-and-forget-it crowd.
Broadly speaking, yes. A villa is like owning a business. A condo is like owning a mutual fund.
I love that analogy. Okay, we've talked about the good stuff, the money, the beach. Now we have to talk about the gotchas, the risks. Because Ocean Worldwide was pretty clear that there are traps for the unwary.
The biggest one is the seasonality trap. We touched on this, but we need to really look at the numbers.
This is the high season versus low season thing. Yes. In the high season, November to April, occupancy is fantastic. We're talking 80 to 95%. Prices are high. Everyone is making money. You feel like a genius.
And then May comes.
And then May comes. The winds change. The rain starts. Low season. Occupancy can drop to 30 to 50% for short-term rentals, sometimes even lower.
Wow. So your income doesn't just dip, it can plummet.
Correct. And remember, your costs, the internet, the pool cleaning, the common area fees, those don't drop. They stay the same. So you need to make enough profit in those 6 good months to carry you through the 6 quiet months.
Whereas the long-term investor,
they don't care about the season. Their tenant is there in July just as much as they are in December. Long-term leases are a shield against seasonality.
that's a really powerful way to put it, a shield.
Now, there is another risk that Sandra O'Neill emphasizes, and that is regulation.
Yeah, I feel like this is a gray area in a lot of countries. Can you just list any property on Airbnb?
And forget, no, you absolutely cannot just list anything. There are zoning laws, there are licensing requirements.
Like hotel licenses.
Exactly. If you are renting out daily or weekly, you are effectively operating a hotel. Under Thai law, you might need a specific license. If you ignore this, you can face fines.
And I imagine cargo developments have their own rules too.
They do, and this is where people get caught out. You might buy a beautiful condo thinking you'll Airbnb it, only to find out the building management has a strict no daily rentals policy because the long-term residents don't want strangers coming and going.
That would be a disaster. Buying an investment property you can't legally rent out.
It happens, which is why doing your homework on the specific development is crucial. You need to ask, is short-term rental actually allowed here before you sign anything?
One last risk mentioned was market saturation.
Yes, oversupply. There has been a boom in condo development. If there are too many one-bedroom condos on the market, the prices drop. But here is the nuance. Short-term rentals are also heavily dependent on the global economy.
Because they rely on tourism.
Right. If there is a global recession or a pandemic, as we all remember vividly, tourism stops. Short-term income goes to zero. But the people who live there, the teachers, the expats, they usually stay.
So the long-term model is also more resilient to global shocks.
It is. It's the difference between a high-growth tech stock that fluctuates wildly and a blue-chip dividend stock that just keeps paying out.
That's a great analogy. So we have covered a lot of ground here. We've looked at the money, the effort, the lifestyle, and the risks.
And we've seen that neither choice is wrong. They just serve different masters.
So let's try to summarize this into a decision matrix for our listener. When should you choose short-term?
Choose short-term if you want to use the property yourself. That's the big one. Also, choose it if you are willing to handle the management demands or pay that 20–30% for someone else to do it, and if you can handle the variable cash flow of the low season.
So you're chasing maximum income, but you want that flexibility.
Exactly. And when should you choose long-term?
You should choose long-term if you want steady, predictable income. If you want a hands-off investment with lower hassle. And crucially, if you are okay with not having access to the property yourself.
Right. If you're treating it purely as a financial asset.
It really clarifies things. It's not just about which one makes more money on a spreadsheet. It's about what fits your life.
And that leads me to a final thought on this. The most successful investors I've seen, and I think Sandra O'Neill would agree based on her years of experience, are the ones who match the property to their personality.
How so?
Ask yourself, are you buying a business or are you buying a savings bond?
Oh, like that.
A short-term rental is a business. It requires attention, marketing, customer service. A long-term rental is a savings bond. It's kind of boring, but it works. If you try to treat a short-term rental like a passive savings bond, you will fail.
Are you buying a business or a savings bond? That is a great question to ask before you sign any deed.
Absolutely, and you shouldn't just guess the answer.
Well, this has been a fascinating look into the Phuket market. It's certainly more complex than just buying a postcard. And a huge thank you to the insights provided by Ocean Worldwide.
Yes, having that on-the-ground expertise makes all the difference. It takes the guesswork out of it.
If you want to dig deeper into the listings, or maybe reach out to Sandra O'Neill and her team directly, because she has helped thousands of people do exactly this, you can find them at oceanwwp.com. That's oceanwwp.com.
And as always, make sure you do your homework, check the local laws, and maybe visit a few times before you commit.
Wise words. Thanks for listening, everyone. We'll catch you in the next deep dive.